Yeah? Okay. Thank you, everyone, and it's a real pleasure and honor to be here, and I would like to extend my thanks to the Bank of Thailand as well for inviting me and giving me a chance to speak about India's journey around building digital infrastructure for financial services. So this journey started off, if we go back to India in 2008, roughly at that point in time, we were 1.2 billion people with over 22 different languages, 28 states. So large amounts of diversity, large numbers of people. And at that point in India's journey, most of the population did not even have a bank account. So as we thought about financial inclusion, how could we go ahead and attempt to solve for financial inclusion when almost the entire population didn't have access to a bank account? And so that became the starting point. The fact that they didn't have a bank account was due to numerous reasons. Reasons around they didn't have ID. I think the slides are jumping a bit. Do I have to point it in a certain direction? Okay. Yeah, I think I have to point it here. So they didn't have an ID. Because they didn't have an ID, the cost of doing a KYC, the transaction cost was extremely high, and therefore the formal banking system did not want to go ahead and open accounts for them. Many of these individuals, as I said, India being so large, they didn't have access to bank branches because that was too expensive, again, for commercial banks to set up offices, set up branches in these rural areas. And connectivity was extremely poor. As a result of which, even when the government was doing welfare transfers to the entire population, we saw a lot of leakages. In excess of over $50 billion a year was being taken out by middlemen along the chain as part of the usual cash transfer process. So 20 to 40% of the amount that would be sent would get lost in leakages. So people were not getting the money, the welfare that they deserved. And we saw a lot of reasons for that, primarily the fact that they didn't have a bank account and it was primarily used only in a cash-only method. So what changed? What changed where India went from having almost no one in the country having access to a bank account to, in little less than a decade, in about 9 years, 80% of the adults had access to a bank account. And this is a graph from the Bank for International Settlements, where they extrapolated, starting in 2008, if India didn't do anything, that is, we continued as is with the same paper processes, we would have taken roughly about 50 years, 5 decades, to get to where we got to in less than a decade. And the key reason for that leapfrog was the introduction of digital public infrastructure. So think of this much like the physical infrastructure that all of us are used to. The roads and highways on top of which the governments of varied countries lay out rules, regulations, standards, and then different private innovators build on top of that, much like the automobiles that all of us use. But in the digital world, we stopped building digital infrastructure. So you started to have certain large monopolies get created. And so all we did in India is we said, can we create a set of open technical standards, much like physical highways, but here, highways for the digital economy. And the first highway that we created was for identity. So Aadhar is India's biometric ID program. To think of it very simply, it's a 12-digit unique identifier that's given to every Indian. It's just a randomly generated set of 12 characters, numbers, and today over 1.34 billion Indians have an Aadhar that they can use to authenticate, to prove who they are in an online manner with any service provider, whether it is to open a bank account, so with a bank, whether it is to get access to SIM cards with a telecom company, or whether it is with a fintech or lenders, or even mutual funds, capital markets as well. They could use this identity without having to be physically present. So that ID, which was driven by the Unique ID Authority of India. So on the institutional side, to roll out Aadhar, India set up UIDAI. This was a special purpose institution, separate from the ministry, although regulated through the Aadhar Act, that was made responsible to actually bring on board best-in-class technical talent, create best-in-class technical systems that would then roll out this national ID program that was then made available to the private innovation ecosystem. The benefit of Aadhar was it was used by the banking system to actually open accounts for every adult within the Indian ecosystem. As a result of the fact that now every working adult had a bank account, the government could move their entire welfare subsidy program completely electronic, completely digital. So in seconds, today the government sends billions of dollars into people's bank accounts. This was used during the pandemic as well, when we had to transfer money to migrant workers, to women, to farmers, so on and so forth. Again, that was mobilized in minutes straight into their accounts that they can then use, withdraw either in cash or through other digital means and transact with the rest of the economy. So as a result of Aadhar, the Indian government went on to save about $27 billion. It spent about $1 billion, but went on to save over $27 billion and is continuing to be used across a larger number of both central schemes and state-driven schemes. So that was the first step. People had identity, people had bank accounts, money was being transferred to their bank accounts. But how do they transact with others in the ecosystem? The traditional method of cards, for a large part of the population, was very expensive. Imagine a small vendor having to buy a point of sale terminal and then 1.5 to 3% being used at every transaction. So that forced us to innovate. And in 2016, India launched the Unified Payment Interface, UPI. This was built completely on the back of the banking system. Think of it as a very simple protocol. It is a protocol that allows you to transfer any value, in this case money, currency, from one store to any other in a safe, authenticated manner. So to start off with, the store was a bank account, but soon the central bank enabled wallets and credit cards on the same protocol. Since UPI got launched, we've seen over last month, we just crossed 10 billion transactions per month. Our expectation is we'll soon get to 1 billion transactions per day of people using this payments protocol. And even on the merchant side, small merchants, from India's independence 1947 till about 2016, only 5 million merchants had a point of sale device, acceptance points. So we had only 5 million acceptance points. With the launch of UPI and this interoperable architecture, we went from 5 million to 50 million acceptance points in just 5 years. And so you now had 50 million merchants that were receiving money digitally, generating digital trails, digital capital, which becomes very useful as we now think of shifting the world from lending primarily based on physical collateral, as it is today, to lending based on information collateral. And so the big shift for us was really the shift in thinking not just about portals, not just about platforms, but to actually be thinking about protocols and then building governance mechanisms around these protocols, these large country-scale protocols. The last protocol that I would like to share with you is the account aggregator system. So today, as we all know in the financial services ecosystem, how does a customer, whether it's an individual or a small business, get access and control over their own data? It's extremely difficult, very fragmented, many a times very physical, or even in the digital world, it's quite a broken experience. And so then we asked ourselves a question. On the left-hand side, you have custodians of an individual's information, of their data. This could be a bank, it could be a mutual fund, it could be the tax system, it could be any other government or private sector authority. On the right-hand side, you have entities that want to get access to this individual's data. So how does the individual actually give permission? How do they give consent? And how does that consent take place in a manner that's compliant with privacy legislations that many countries have? And so that's where the central bank created a new class of institutions called consent managers, and the account aggregators that you see are consent managers for financial data. But we now have consent managers for health and other types of data as well. And the way it works is very simple. Data remains at source. So there's no centralized repository that gets created. Data remains wherever it's generated. I can go to any account aggregator of my choice. So therefore, it's a competitive market ecosystem of players. I can choose any one of them, discover where my data resides, link my accounts, and I'll have an ID, say Siddharth at the rate of AA1. So the next time I go to a lender, I just give the lender, rather than carrying a whole bunch of physical documents or digital documents in a folder and trying to upload, scan copies, I just give to the lender my account aggregator ID. And in real time, the lender will now send me a consent request that will say, okay, Siddharth, in order to give you a loan, I need access to this data for this time period, for this purpose, so on and so forth. And if I am okay with that request that I see on my account aggregator and I click approve, in real time, that data is fetched from my custodians on the left and shared in a digitally signed, encrypted manner with the entity that's asking for it, like the lender on the right. And so this can be used for lending, this can be used for new wealth management products, this can be used for creating new insurance products, and even outside the financial services ecosystem. I mean, as simple as a visa. Many a times now we have to go and take last 6 months or last 3-month printouts. I can electronically share my data with these offices as well. So fundamentally, this architecture put individuals and put small businesses in control over their data. And what's key is, because this was a protocol approach, the government did not create one central platform. In fact, the government didn't spend a rupee. They created the framework, they created the ecosystem, they put in place the guardrails, and they left private sector to innovate and build the use cases and build the products and build the experiences on top of that. And as a result, because it wasn't one central platform, but an ecosystem using these protocols, much like email and other protocols that some of us are familiar with, you had a diverse set of market players across the banking sector, capital markets, insurance, pensions, across the board actually coming together and using different parts of this to actually build out better offerings for their customer. And so our view is that given the societal challenges ahead of us, we need to refine the platform-centric model that many of us are familiar with and actually think afresh when we're looking at democratizing credit or democratizing financial services more broadly, when we're looking at the problems in commerce and how do you allow more small businesses to participate in a diverse manner in e-commerce, or even when we're looking at mobility. All of these similar sorts of questions come up. So really, the way to think about these are just loosely coupled building blocks. They're Lego blocks. So you don't need ID to do work on payments, or you don't need the same payments to work on data. These are all loosely coupled building blocks that India has created over the last decade and a half to address a range of problems in these various sectors. And what I shared with you today was just 3 of them. And so the fundamental premise behind this is really about creating a model that is inclusive, that anyone can access. All of these ecosystems are accessible, whether you have a smartphone, whether you have a feature phone, or even if you don't have a phone, there are assisted experiences that are built out by private sector. It's equitable, it gives people choice, people as well as merchants choice around how they want and who they want to participate with. It's open access, so you really create a chance to create new types of innovators coming up in these ecosystems, and you fundamentally leave no one behind. And so lastly, over the last almost 8-9 months, as India gained presidency of the G20, which recently concluded, this has been a key priority. And I'm glad to say at the recently concluded Leaders Summit, there was consensus across 20+ countries on digital public infrastructure, like what I described, being a key enabler for growth going forward across the board. So thank you so much again for giving me this chance to share this with you. And if you have any questions, happy to take them later on. Thank you.